Welcome to NJBIA's Mind Your Business. I'm Bob Considine. Well, if you're overwhelmed and anxious about a personal or business tax issue, fear not. The Prager Metis team of tax controversy professionals will work with you to achieve your best possible outcome. And here to discuss how they work to solve tax disputes is Prager Metis partner in charge, Marty Davidoff. Marty, thank you so much for being here.
Glad to be here.
All right, so this is great. Before we get into tax controversy, which is a great name, let's talk about Prager Metis, the firm.
Well, Prager Metis is a 600 plus person firm, and we have over 20 offices around the world.
Okay.
Including India and the United Kingdom.
Wow.
We have a China desk, an Italy desk.
Right.
We have offices here in the metropolitan area. We have 7 between New York and New Jersey. And it's really, it's a very a full service firm. And we have a controversy department of over 20 people.
Wow.
That focuses just on controversy.
Right, so let's talk about what is tax controversy.
Tax controversy is basically representing people before the IRS and state tax agencies. It includes examinations and audits, collection matters, and a whole potpourri of items like innocent spouse, penalty abatement, you name it, we take care of it.
And so how does the process usually start? Is it a client or a pending client receives a letter from the IRS, so they come to you, or is it a proactive thing where, hey, I haven't done something right, let me try to fix it?
It's a little bit of both. I mean, sometimes we have people come in with, a 2-foot pile of letters they haven't opened, and they said, maybe I should be doing something about this.
Yeah.
Often it's somebody goes from being an employee to being in their own business, and they see their first return, they're going to owe money, and they say, I'm not going to file, which is the wrong thing to do, because then you're building up penalties.
Right.
And so, it's a whole potpourri. A lot of them are non-filers. Some of them are getting audits from the IRS, collection notices from the IRS, a lot of collections. So really it's a whole thing. Divorces resulting in innocent spouse desires by one spouse or the other.
Right. What's the innocent spouse thing?
Innocent spouse is where the two spouses file a joint return, so it has to be a joint return, which you make an election to file jointly, and then you're electing to be responsible for each other's items. But then one person gets audited on their Schedule C, on their business, and there's an adjustment.
Okay.
And the other spouse says, I shouldn't be responsible for that. I knew nothing about it. They hid the money. Sometimes, so there are various standards for that. And if you qualify for the standards, you get that basis. Interestingly, New Jersey doesn't have a law allowing for innocent spouse. It's only a federal rule.
Oh, that's interesting.
But the Division of Taxation, to their credit, they have allowed it when the federals allowed it, and they check a few things. So they've been really good about that.
That's interesting. Yeah, that's very interesting. And so what happens when you sit down with a client? Is it you come up with a plan? What is the process?
The way it works is they call my office, somebody triages them,
Right.
all right? I look at the triage and said, all right, who's going to handle it? Is it going to be me? Is it going to be my partner, Robin? Is it going to be one of the staff members? And we put a crew together. We then do a consultation, and we do exactly that. We spend anywhere from 45 minutes to an hour and a half, and we go through everything. At the end of that call, they get an email that lays out a specific plan of action to the extent we're able to from the information we have from the call.
Okay.
So we send out the plan of action, and then they decide whether or not they want to engage us for the full engagement. But that's how they start. They just call the office, and somebody does an intake.
Yeah, I was going to say that first call could be very emotional for some people, I imagine. Like they just want to get help, right?
I've had people who after that call just say, oh my God, they thought they were going to go to jail. And I explained to them exactly what the rules are. The IRS in particular has a lot of appeal rights. Yeah. And I told them these are the steps we're going to take, and we go literally step by step.
Right.
And then that's how we follow up getting everything done. My staff works that way.
So Marty, what are the things businesses are getting most pinged on, I guess, for lack of a term? What are the calls you're getting?
Well, in New Jersey, I'm getting a lot of calls for sales tax audits.
Okay.
People are either not paying sales tax on things that are taxable. They're not paying tax on things they're buying. They're not paying something called a use tax on things they're buying that the vendor should be collecting, but they're not. But then if the vendor is not collecting it, you have to pay it. And if you don't pay it, then the IRS, New Jersey can come and audit it. That's the biggest thing from New Jersey. And the other thing, there's employment tax audits by the IRS.
Right.
There's independent contractor versus employees by the Department of Labor. So there's all kinds of things like that.
And in the case you were mentioning about not collecting sales tax on taxable transactions, things like that. Is it a matter of people, they weren't aware they were doing something wrong, or they were aware and they were just hoping to get away with it?
Both.
Okay.
I think probably 60-40 hoping to get away with it.
Right.
But a lot of people are just not aware of it. It's particularly younger people. I mean, you take a student mowing a lawn for their neighbor.
Right.
That's subject to sales tax.
Yeah, that's very interesting. One of the things I saw on the Prager Metis website under tax controversy is an option for voluntary disclosure filing. What is that, Marty?
Well, in New Jersey, there are some people who haven't filed returns for many years.
Right.
And in New Jersey, in many cases, you can come forward, and if they have not given you a notice, you can say, look, I will file 3 years worth of returns, and they will say, we'll have no penalties on those 3 years, and we'll forgive you for the years prior. Now, 3 is not always the magic number. Sometimes 4, 5, or 6.
Right.
It depends upon the factual situation. But you basically make a proffer anonymously. So we make an anonymous proffer, we go back and forth,
okay.
and then if they say they're accepted into the program,
Right.
you're in the program.
Wow.
And if they go back later and say, well, you got a notice 2 years ago on this,
Right.
then you're out of the program. So you have to make sure that there wasn't a notice involved.
I had no idea that option was available.
And New York also has a very good voluntary disclosure. The feds have a criminal voluntary disclosure,
Really?
but it's not really, it's not really set up like the state.
It sounds like a witness protection program.
Well, it's just for people who are concerned about criminal, it won't help you file without penalties. It's a whole different thing. It's not the amnesty type of thing that New Jersey has with the 3-year voluntary disclosure.
And you mentioned like sometimes the IRS will give you a certain amount of years to pay off a penalty. Is there a maximum amount of years IRS? Is it 10 or is it 20?
Well, the IRS can only collect for 10 years based upon their original assessment, and that can be extended by certain things. Plus, they have the right at the end of close to the end of the 10 years, they may get a judgment which gives them another 20 years. But most of the time, the collection statute expiration date, they call it the CSED, is 10 years for what they have to pay. They have kind of an automatic that if you want to pay in 6 years and can fully pay in 6 years, they'll usually allow you to pay in 6 years. And you can, if it's under $250,000 and you're early in the process, you can do that just by calling them and giving them the facts, and they'll do it. If you wait till later, they're going to make you do financial disclosure.
Okay, very good. From a distant outsider point of view, Marty, I always think about, it always seems to me there's greater complexity in tax law, there's just more filing requirements. It seems to me that's been the case in the last 5 years, but I don't know if I have that right. Is that more accurate?
Well, I think the filing requirements have been the same. I think people are just realizing it. I mean, there are a couple here and there, but the foreign, which is about 10 or 15 years old, filing the federal bank account reports, filing about foreign trusts, those are just, people are just realizing it, but they've been around a while.
Okay.
So if you're investing overseas in a business, a foreign business, you have certain requirements to make disclosures in certain situations. Plus foreign trusts, plus gifts. Even if you get an inheritance from abroad, which was not taxable, if it's over a certain dollar amount, you have to report it on a Form 3520 to the Internal Revenue Service. If you don't, the penalty is like $25,000. The penalties are tremendous for not doing this stuff.
Wow. Let's talk about, you've probably been asked this a lot, but when we talk about audits or investigations, what are some of the things you can do to prevent one of those things happening?
Well, clean books and records. I mean, all of this simplicity or complexity comes down to clean books and records. You have to have books and records that indicate what your business profit or loss is.
Okay.
And, don't mix in, you don't want them auditing your personal expenses. So don't mix in your personal into your business accounts. Keep a separate business account. And, and clearly just don't pay personal expenses out of the business account.
There you go. What about, let's say it's too late, you got a letter, you've been audited. What's the process? What do you recommend from there?
Hire a representative, or at least be consulted by one and work with them.
Okay.
Because there's kind of like 5 steps to doing this. The first thing is you call the revenue agent and say, okay, what's up going on? And this should be by a representative.
Okay, not by the client.
Not by the client. Okay. I think, the representative will do a pre-audit. The tax controversy specialist will do a pre-audit. The client should be a no-show at the audit. Because, if the auditor asks me as a representative a question, I can say, okay, I'll go back and check with my client. And then I can make sure make sure the answer is correct. And then, just follow the rules. You've got to, you can't accept unreasonable timelines. Don't let them push you into doing things. Don't volunteer anything that is not part of a street. Don't volunteer anything that's not asked.
Right.
They ask a question, answer narrowly, unless it's part of your strategy.
Right, right.
And and never lie. You can't lie.
Nope.
And in the end, just negotiate a reasonable resolution. I won't negotiate a resolution that's not fair to my client.
Right. Very good. And we talk about good representation. A lot of folks have a family CPA, but if you're getting dinged by the IRS for something, you probably don't want to go that route, correct? You want to go to Prager Metis, and they're going to help you with your tax.
You want to go to Prager Metis, you want to go to a tax lawyer, you want to go to somebody who specializes in tax controversy. Let me put it this way.
Okay.
All right? You and I probably have great family physicians, all right, and internists, all right?
Clearly, look at me.
In any event, you're not going to ask them to do heart surgery, all right? He's going to refer you to a cardiologist, and there's no question of it. But the public has this misperception that every CPA can do stuff with an IRS, and that's not true.
Right.
All right, it's like saying every attorney can draft a will, and every doctor can do heart surgery.
Right.
That's not true.
Right.
So what you want to do is find somebody whose main occupation or his main field is doing tax controversy, because those people will represent you. They'll know the nuances and the details.
Right.
And that's what you want to do. If there's somebody who comes in for me and needs, I'm a CPA and an attorney, somebody comes in and says, Marty, I want you to help me with a criminal tax matter.
Right.
I don't know that well. I'm not a specialist.
Right.
So I'll refer him to the person who's the criminal tax specialist.
Right. So last question, Marty, is kind of a personal, professional one. You get a client and you've helped them to get the best possible outcome. What do you get out of that, helping folks who are probably in a pretty dire situation?
Well, we get paid for it,
Yeah.
all right? But we feel great when we
Right.
get a win. We're all high-fiving. We actually share our wins in a week
Right.
in a weekly meeting. We said, lessons. We have lessons learned,
Right.
and for when we can do better. And we have successes, which
Right.
and we have a lot. And sometimes we were just in. Somebody had come to me. IRS was denying a $100,000 refund for a net operating loss carryback for
Right.
a business.
Right.
And
Wow.
they came to us, and we went to appeals and convinced appeals that it was timely filed as an informal claim.
Right.
And on that basis, we were able to succeed and get that refund back. And that just feels great.
Yeah, good for you. That's great. I'm glad you're there to help businesses and individuals with this. And folks want to learn more, they can go to pragermetis.com, hit the services tab, and then click the tax controversy box, and you get all the information there, right there. Marty Davidoff, thanks so much for being here.
Thank you very much.
All right.
Glad
we'll
to
be
be back.
right after these words.